Any comments or any questions you might have are on Twitter. Just use hashtag MKTDay, or you can follow me at DaganX or email us at yourmoney@skynews.com.au, and we will try to answer any questions that you have. Just to kick off with Julia Lee, what did you make of the session? It was strong, then it waned a bit, then it sort of picked up pace at the end.
Good to see the Australian market fighting back towards the close. I've got the intraday graph behind me. You can see it was a bit of a roller coaster ride. Starting off the morning very strong with gains of more than 2%, and then we saw most of those gains being wiped away, and then of course just coming into the close in the last hour, the market fighting back. In the end up by 1.7%, so a positive performance. I guess the concerning thing for traders is the volumes traded today. We saw $6.4 billion going through the market, and while that sounds like a lot because a normal trading day we see about $5 billion, today was index derivatives expiry, and a typical index derivatives expiry day sees volumes of about $8 billion. So extremely light volumes, although we did a strong rise, and that's not a good technical signal. All in all though, 4,073 points. It does look like the market's still finding that a bit of a challenge. So if we have a look at the 60-day chart for the Australian market, this is what it looks like. I've just drawn a line at that mark, and you can see we've just been struggling in the last few sessions. We've been going in and out of that mark, but unconvincingly able to break it, and we just closed below that mark, and that of course represents the 50% retracement level from the 2009 to the 2010 move. But all in all, most sectors trading higher. Financials, energy leading the move, and we did see individual stocks with some stellar performances. Sundance fighting back today after a weak week, up more than 13%. We also saw Sigma up by more than 10% on the back of broker upgrades, and Aquila doing well after its result, up by 6.7%.
With their results, Mr. Brooks, Bernie Brooks, the CEO, painting a cautious picture, I suppose, to put it nicely, in terms of the outlook. Shares in Myer doing pretty well, though.
We did see shares in Myer outperforming, and I think part of that is a huge amount that Myer is being discounted at the moment. In the last 52 weeks, we've seen the shares falling by 50%, so really pricing in a pretty bad scenario. And in terms of this result, we didn't see any surprises come through. We did see a net profit result of $159.7 million, pretty much in line with market expectations. If we have a look at gross margins, though, they have been on the rise, and that's partly because of the Myer exclusive brand strategy, and also trying to control the amount of discounting and sales that they've been doing. So it does look like that's had a positive effect. But I guess what the market was concerned about was the outlook. In terms of the outlook, it does look like net profit could be down as much as 10% this financial year, and sales looking flat, another $48 million worth of extra costs as well. In terms of Myer's strategy, we know that they are still looking to roll out 12 new stores over the next 3 years, and that should underpin earnings growth. But it has been a very difficult environment for the retailing sector. We've seen a strong Aussie dollar, a strong online retailing presence, which is growing here in Australia because of that high Aussie dollar, weather impacts, rising interest rates. So it's almost been a perfect storm. And I guess you have to ask yourself, can things get much worse for these retailers? So in terms of the fundamentals, looking extremely cheap, and that's because the market really hasn't seen a huge uptick in terms of consumer spending or the trends there, although the Roy Morgan survey for the last few weeks has been looking rather promising. So Myer shares doing well today, but it is from a very low base. It had been trading around that $2 mark, and the last 52 weeks we've seen it down about 50%.